volatile. And over the years, we've been able to add to our performance by trimming when stocks are really scaling at a very rapid rate, and by buying when they are falling. So, buy low, sell high. But we really do that just at the margin because we are a high conviction manager. So you're not going to see us flipping in and out of stocks. We have right now a portfolio that has been fairly concentrated. And so our conviction is very high as we wait for lower interest rates and a broadening out of the market to take our highest conviction names higher.
Fantastic. Cathie, can I just ask you a quick sort of follow-up question? And I think a lot of newer traders and investors will be in this bracket, which I'm about to describe, where a certain stock in someone's portfolio is doing really well or really badly. They're checking it constantly throughout the day, multiple times. Are you like this, or are you more just, okay, I'm going to step back? It is what it is. Our valuation metrics are what they are, and that's what we're going to focus on.
Well, what we do is ask our trading. Yes. And I feel privileged to have trained there because I believe what we're doing now at ARC with truly active management, research focused on names that are not in the broad-based indexes. A lot of asset management firms don't want to go there. It doesn't feel like safe terrain, but from our point of view, given how rapidly the world is changing, that I think that we're going to be in the safer place a longer run, because we founded the firm to figure out how the world is going to change and to get on the right side of change.
Yeah, absolutely. I don't think we can do this interview without talking about Elon Musk. And Elon, if you're watching, hello. I look forward to having you on here one day. Cathie, you've been a vocal supporter of Elon and his vision. What is it about Elon Musk and his leadership that makes you confident in his ability to drive innovation, especially through the companies like Tesla and SpaceX?
Pulling it all together in the autonomous model. And so if you look at the model, you'll see that Tesla is moving from an EV model where the gross margins are right now, they range in the 15-16% range for the EV sector. And we think they'll take those margins to the 30% range. But what autonomous is going to do is turn Tesla into a software as a service company. Software as a service companies have 80% plus gross margins. And we think that the inefficiency in the market, while Tesla is not priced purely like an EV manufacturer now, it's more richly priced. It is not priced like a software as a service provider. And you'll see in our model how we transition from EVs now dominating the model to the autonomous platform dominating in 2029. And we think autonomous will account for 90%.
Very much Cathie's and ARC's view. Tesla is also my largest single stock holding on the platform. So again, other than a lot of controversies around Elon, I think as a founder, visionary, CEO, and running the companies, I think it's quite amazing to see it and to figure out how to replicate it, maybe for myself with less controversial impact.
Yeah.
A lot of people ask me about that point, Yoni. The controversies around Elon. What we do to understand whether or not he's on the right track is we keep focused on the technologies and how he's driving them. He epitomizes our belief that technologies and understands that technologies are writing down learning curves He figures out, he does a lot of first principles research. He does not depend on on listening to and learning how things have been done. He's creating new ways of doing things. And using the learning curves and cost decline. Our research, we just talked about Elon and his first principles approach, white sheet of paper. I'm not going to look at how things have been done. How will they be done? ARC does the same thing. We have centered our research around something called Wright's Law. Now, Wright's Law is a relative of Moore's Law. So Moore's Law, many people know from the semiconductor space. The difference is Moore's Law is a function of time. It basically says twice the power at the same cost every 18 months to 2 years. So it's a function of time. Wright's Law is not a function of time. It's a function of units. And it basically says for every cumulative doubling in the number of units produced, so cumulative doubling, 1 to 2, 2 to 4, 4 to 8, for every cumulative doubling in the number of units produced with a new technology or of a new technology, costs will decline at a consistent percentage rate. And if we are right, then they are probably short truly disruptive innovation. Sure, they have a lot of innovation with the usual suspects in the broad-based benchmarks, but they are lacking the companies that are going to be much more transformational than those in the broad-based benchmarks.
Yeah, and actually, just for anyone watching on YouTube right now, I'm pointing below because that's where all the links will be that Cathie has mentioned, and also on the podcast. If you're listening, go check the bio, and you'll be able to find those as well. Cathie, just a quick question. We've got time for a few more. Would you say it's the most interesting time to be an investor right now that you've seen in your career?
Yes, and it's the most interesting time, and psychologically, behavioral science is going to write books about what's going on. If you look at the period from the early 80s to the tech and telecom bubble, that is when all the seeds for what is happening today were planted. They were planted back then. And everybody, investors went crazy in the late 90s. They just threw money at the seeds. The seeds were no
for the numbers. Sometimes they might not have the expertise to do advanced things like trimming of the top, so they just hold it for longer. But I think bringing in more retail investors from all around the world to invest in companies that they believe in changes that paradigm, and we'll continue to see the rise of retail investors. And we're super excited about the interest rates going down. I think that's going to release a lot of dry powder exactly to what's not in the S&P 500. The S&P 500 sort of is an easy investment to do, but when interest rates go down, when there is no risk-free 5%, and you have to do the effort to invest in other parts of the market, I think that will unleash a lot of great opportunities, and definitely, personally very big believer in all of the segments that the ARCs are researching and investing in.
Yeah, very interesting.
Yoni, sorry, Sam. It's interesting. Two of the most important AI companies out there, and I put Tesla into AI
trends, but we're also very big believers in those trends. Bitcoin, we've seen the rise of Bitcoin, and with it sort of the rise of eToro in 2017, then 2021. Tesla was the most popular stock. Now, actually, suddenly NVIDIA is the most popular stock. So I think they're catching on the right trends. And what we see over time is they're getting smarter, right? Which is very interesting to see that people actually have better performance. Well, maybe it's basic or logical, right? But we see people joining eToro and their performance in the first year, then second year, their third year. And what you see is over time, they're actually decreasing their risk and improving their performance over time, which makes a lot of sense because a lot of retail investors jump into the market to buy things like maybe it's Bitcoin or Tesla, or maybe it's even something like Doge. But as they learn about the markets, as they're exposed into more content, they're becoming much smarter, and they can learn from one another on the platform. And it's interesting to see that
the assets, the crypto assets that, or digital assets that we think are going to be the big winners. So I can't talk about it now, but stay tuned. Yes, and we have some strategies with these assets in them, but they're on the private side. So, but we want to share our research in that realm as well, because
by the way, we can open also an ARC digital assets portfolio on eToro as well. So we're not limited only by listed instruments on eToro. We'll follow up. We'll definitely follow up on that. That's the fun part of an eToro. We can actually create things that we're happy to work. Also, we're working on a founder mode smart portfolio. Maybe we can do that with ARC as well.
Yeah. Well, we have 4 analysts and strategists on the digital asset space. So we do think it's going to be big. We know, I mean, I heard some crazy number there. Are there 40,000 assets? It used to be 10,000 crypto assets. Most of them will die. But there are going to be, we don't know if it's, 20 or the internet makes information ubiquitous. And now that companies like ARC give their research away to help retail investors orient their portfolios, we get so much back in terms of, of course, assets under management, but even more than that, we get, we've had retail investors start YouTube channels about how we're trading, since we post our trades every day. And so they helped us. They helped ARC become a global brand. It's unbelievable. We're just about 60 people, but we do have a global brand. And one of the reasons we are so small is we have outsourced distribution to companies like eToro. That's been a very important part of our growth story. So we do what we specialize in, and distribution is not our core competency. eToro does an amazing job.